best term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
I was out working, a car out of the blue crossed the center line and crunched me. There was nothing I could do. Everybody thinks that they can do their own attorney, but you can't. There's too many legal hoops. There's too many options.
Insurance companies love taking advantage of people who try to handle their cases alone. Seriously injured? Call Kanowski-Bresney. We get your worth.
I'm very happy with the result. I don't think any other attorney could have done a better job.
Call Kanowski-Bresney at 888, the letter U, count and the number 2, or see me on the web at bresneylaw.com.
My name is Whitney Allen. I am a widow. My husband, Ryan, died. We never thought in a million years we'd have to use life insurance. The unexpected happened. With Ethos, it is so fast and easy. It's 100% online. You can get a quote in seconds, apply in minutes, and get same-day coverage. No medical exams, and you can get up to $3 million worth of coverage through Ethos.
Get your free quote at ethos.com/term. That's ethos.com/term.
Time spent on application may vary. Online health questions required.
Hey parents, you don't need the latest gizmo, slang, or clothes to be a perfect parent, because kids in foster care don't need perfection. They need you. For more information on how you can adopt, go to adoptuskids.org. A public service announcement from the U.S. Department of Health and Human Services, Adopt Us Kids, and the Ad Council.
You're locked into Money Matters Radio, 1120 AM WBNW. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Owning Real Estate in Retirement. Mike, when we talk about someone who might be considering a move from where they've lived pre-retirement to a new location, what are some of the main things they need to consider?
Yeah, I think that they need to focus on the costs first and foremost. I know a lot more goes into a decision like this than the costs alone, but what I find consistently is that folks in retirement overestimate how much they can save by moving and underestimate how much they're going to spend as they age to stay in their home. And so both of those factors are important when considering this big decision of, hey, do I consider downsizing or moving to another area?
One of the other things that we've seen over the past few years is that some of those estimates of costs can change quickly as well. I think about insurance in Florida as an example, property taxes in parts of the country. These are things that you need to account for, and that those costs might change as you go through retirement.
Yeah, I mean, some of them are easy to identify. Like, yeah, insurance costs have sure gone up a lot, and maybe they'll continue to do so. Electricity costs are another one. The others, though, are much more difficult to quantify. Like, I currently snow blow my driveway. How much longer will I be able to do that? How much longer will I be able to climb up the ladder and clean the gutters? Like, these are really complex questions that you need to very much think through as you age in your home.
Our guide is titled Owning Real Estate in Retirement, and there are 2 ways to request it. The first is by calling 800-393-4001. The second is by going to armstrongadvisory.com. Again, the guide is titled Owning Real Estate in Retirement, and you can request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mark Varner is the CEO of Veterans Development Corporation. Mark faithfully served his country from 1981 to 1984, and we're thrilled to have him as a partner and presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family that includes his father Victor and brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and it's one of the main reasons he chooses to give back to this special community. Mark is honored to continue the legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the Disabled American Veterans Department of Massachusetts. You can join Mark and help our great American heroes today by making a donation to support the DAV Department of Massachusetts. Please visit dav5k.boston. That's dav5k.boston.
Estate planning doesn't have to be complicated. Cushing & Dolan's new guide, The Simplicity of Joint Revocable Trusts, shows couples how to stay in control, avoid probate, and help protect what they've built for their family. Call 866-848-5699 right now and ask for your free copy today. That's 866-848-5699. Or request it online from our website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
We've got a shortened trading week this week because of the Thanksgiving holiday that's going to be taking place on, it's Thursday, right, Mike?
That's the one,
That's the one, yeah. Thanksgiving Thursday. And so we've got a shortened trading week, not too much expected in the way of economic data. Basically nothing expected as far as earnings that are likely to move the needle. The biggest company I think that you can look at from an earnings perspective this week is Deere, who reports on Wednesday. They're not a tiny company by any means, but with a market cap of $130 billion, it's not one that really moves the market in general at this point, which is kind of strange to say about Deere.
What is that, like a 30th of an NVIDIA?
In that ballpark. Yeah. Yeah, it's in that ballpark. I mean, Mike, here's... Again, just if like we're doing comparisons, it's half the market cap of Salesforce.
Yeah.
Despite having about the same revenue that Salesforce does.
Sure.
And both of those companies, Salesforce actually reports next Wednesday, so about a week and a half out. But in any case, we had quite a bit of volatility last week. In case you missed things for whatever reason, it was about as choppy of a week as you can have. Not all in one direction, but I think the star of the show was clearly what we saw on Thursday post-NVIDIA, where we opened up about 1.5% on the S&P 500, rose another 0.5%, and then promptly fell 3.5% from there to close down more than 1.5%. Only the fourth time in the last 32 years that we have seen such a move. And I think it encapsulates just kind of what markets are trying to navigate right now, which is, hey, we've got concerns about, is there an AI bubble or not? We don't know. We've got concerns about, is there a private credit bubble or not? We don't know. And we've got concerns about the labor market. Is it going to continue to slow or not? We don't know. And the market was trying to reckon with all these things over the past 5 trading days.
Yeah. So historic volatility on Thursday of last week. Friday, some recovery. This morning, some recovery, although the Dow is doing weird things because the Dow is a stupid index that price weights things. So Amgen and Honeywell are bringing down the Dow, which not terribly relevant to the rest of the market, but they are. The question remains to me, Chuck. I mean, every time in the last 5 years that we've had stocks sell off to any meaningful degree, you've had the buy the dip mentality come in and a bunch of cash backs up that market. And I think through market sell-offs like the one we saw in 2025 back in April, I think of the one certainly during COVID in 2020 and to a slightly lesser degree, the one in 2022 as well.
22, I don't think that buy the dip reflex really
it didn't
kicked in the same way.
No, people did re-enter equities, but it wasn't because they got cheaper. It was largely because the inflation concerns that we were seeing started to dissipate and a new narrative around AI took over. But still, we have not had that prolonged negative sentiment play out. And plenty of people are asking if this is the time that we will, if the narrative is shifting now around what can make this economy and market keep chugging along.
So these are questions that are not going to be answered this week. Unfortunately, if you are looking for the market to give a resounding, hey, this is a problem or this is not, Thanksgiving week 2025 is not where these are going to be answered. I think the labor market questions are going to play out over the next 3 to 6 months. I think the private credit questions are going to play out over the next year. And I think the AI data center ones are going to play out over the next 24 months. Unfortunately, in the world of instant gratification, we need to know whether the 60-point up move in the S&P this morning means anything or not. And that's just not in the cards. It's just not something that we're going to be able to tell you. After all, if the 110-point or 103-point down move on the S&P meant something on Thursday, well, it's been invalidated by the fact that the market has retraced all of those losses in the last 2 sessions now.
Right.
But we still have a ton of intraday volatility. I mean, I'm seeing 0.5% moves on the S&P every 10 to 15 minutes. That's not really a healthy market environment at the moment. So what I will tell you, that the market is actively trying to sort these things out, but we're not going to actually know what's going on with them in the actual economy for an extended period of time, which is disappointing if you want, if you need your answer now. You're not going to get that. We could do other things now. We still have some other stuff that we can talk about for this week. And I think a good place to start is on that AI boom. Because even though I will admit to having some skepticism, I think is the right word, as to whether or not this will pay off the way it's being priced right now. Sometimes I think we go a little bit too far where it's like, people are talking, hey, like there's too much AI spending going on right now and it's not good for the U.S. economy. No, it's really good for the U.S. economy that this AI spending is going on. What potentially could be bad for it is if it turns out there's too much and there's some stuff that has to get sorted out during a few years. But the amount of spending going into AI right now is unquestionably good for the U.S. economy at this particular point in time.
Yeah, there's a New York Times piece out this morning, and the headline of it just really bothers me. So the headline, the AI boom is driving the economy. What happens if it falters? Well, if it falters, it all falls apart. You can't just... It's not useful to just throw out that possibility, right? Like, what are the circumstances under which the AI boom starts to be called under further scrutiny and starts to fall apart and that spending starts to dry up, I think we can all think of a few of them. But just painting a picture of, well, what if the spending on AI suddenly disappears? Frankly, that's not going to happen. It's not going to just disappear. It could be valued differently. It could come in less than is currently anticipated. And in all of those cases, it spells different scenarios. But I find the more frequent now conversation about, oh, well, if it weren't for AI, this economy would be falling apart. Yeah, that's true. But we do have artificial intelligence technology companies spending billions, committing to trillions of dollars worth of spending. And so you have to take the current status quo and kind of extrapolate out what it might mean under different scenarios, because there are some in which it continues for several years.
And I think the other thing to remember is that there is going to be something that everyone in the world considers good that comes out of this AI bubble, despite all of the bad that I think is coming out of it as well. And trust me, like every day now you read, about some of the stuff that these systems spit out to people that is just quite honestly pretty horrible in terms of, the lack of guardrails on it. But I also do think there are some real positives that are going to come from it, much as, hey, despite the fact that, at least once a week now I make the joke of, hey, we should just turn the internet off and, not turn it back on. I still believe that overall the internet is a force for good in the world. It's just, well, it's got some crap that goes along with it. So the problem that you see with this AI spend right now, in my opinion, is just that everyone's being priced as a winner. If you use AI, you're being priced as a winner. If you make AI programs, you're being priced as a winner. If you make the chips, you're being priced as a winner. And as we've seen through basically every boom and bust cycle in history, not everyone wins. There are some losers there, and I say that in like the nicest way possible. Not like, oh, you're a loser, but no, I mean, look, you develop railroads, and there's, too much development there, and some of them go out of business. Radio, kicks off, and everyone and their grandmother starts, a radio station, and a bunch of them go out of business in the 1920s. And, the tech bubble, we can obviously wax poetic about. Pets.com, and, the Patriots were originally going to play at CMGI Field before everyone was like, wait, who's CMGI? Do you guys have any revenue? How are you going to pay for the name on the stadium? This is going to have some losers as well. We just don't know who they are yet, and it's going to take a little bit of time to get there.
To that point about everyone being priced as a winner, we've focused on Oracle a lot over the last few
We're starting
weeks,
to see a little bit of a shakeout there, maybe, but it's just based on today's information.
But to that point, even today, with the sell-off that Oracle has seen, right? Their stock rose from 230 to 300 and then fell back down to that 230 level, still trading at a price-to-earnings ratio in the mid-40s.
Yep.
So, yes, you have a lot of winners still being priced in.
Let's take a quick break. When we return, do we want to talk about whether the Fed cares about AI or not?
Yeah, we can talk about whether they do and whether they should.
Good. I think that's a great idea. Whether the Fed cares about AI, should they care, right after this.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
We're proud to announce that Circle K is now the official convenience store of the DAV Department of Massachusetts. At Circle K, supporting those who bravely served our country isn't just a commitment, it's a heartfelt mission. Circle K is honored to stand with the DAV Department of Massachusetts to ensure that veterans receive the care and recognition they deserve. If you'd like to do your part, please visit davma.org. Thank you for standing with Circle K and the DAV Department of Massachusetts, and thank you, veterans, for all you've done.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com. Planning for the future is challenging. At Cushing & Dolan, we believe that sometimes the simplest step can make all the difference. A joint revocable trust allows married couples to stay in control of their assets while making sure those assets are distributed properly. Our new guide, The Simplicity of Joint Revocable Trusts, shows how couples can take advantage of both the $13.99 million federal exemption and the $2 million Massachusetts exemption without losing benefits when one spouse passes away. This trust may help you avoid probate, reduce estate taxes, and even provide a step-up in basis that can save your family money when it's time to sell your home or investments. Learn how to make your estate plan work smarter, not harder. Call 866-848-5699 right now and ask for your free guide today. That's 866-848-5699. Or you can request it online from our website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. Your home is more than just a place to live. It's part of your story. In retirement, real estate can play a powerful role in how you manage your wealth and plan for the next generation. Passing property to family members isn't always easy. One child might want to keep the home while another prefers to sell it. Maintenance costs, taxes, and distance to healthcare services are all important factors that need to be considered, which is why having a clear plan can help prevent family stress while keeping your wishes front and center. Our new guide, Owning Real Estate in Retirement, is designed to help you fit your property into a long-term strategy that supports your life today and preserves what matters most for your future. Get your free copy right now by calling 800-393-4001. That's 800-393-4001 or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. This year's race was a tremendous success, and if you act fast, you can sign up for next year's race during our early access registration period through November 30th. Discounts are available, but you have to register by the 30th of November. Visit dav5k.boston and secure your spot today. That's dav5k.boston.
Piece from Bloomberg, the Fed is fixated on AI, but not ready to make a Greenspan-size bet. What does that mean, Michael?
So in the mid to late 90s, the Fed was trying to decide what to do with monetary policy, and effectively Alan Greenspan, with some disagreement from the rest of the Federal Reserve, decided that, hey, we think we can keep rates lower in spite of a really rapidly growing economy, and the reason for it is we're going to see productivity growth. So, effectively, the pace at which the economy is growing can be justified, and we'll be able to continue to see that growth without tremendous inflation because we won't need to pay, 600,000 more workers to do these jobs. The internet is going to lead to productivity, and it's going to lead to, justifying the increase in economic activity with fewer working hours. And so basically made a bet on, hey, we're not going to see inflation as a result of that boom period. and kind of worked, right? I mean, there were certainly some ramifications of all that. Low interest rates might have contributed to the dot-com bust. That might have contributed later to the great financial crisis. But, he was right insofar as we did not have back-breaking inflation like the 1970s.
I think the part that's challenging to me is like you talk to most people on most people in most industries, and here's what you generally hear. If it's a blue collar industry, if you're working with your hands, what you hear is that's not relevant at all to my job right now. It's not affecting most blue collar jobs at this point, I think is fair.
Sure.
At least most employees. Like maybe managers might be thinking about it.
Yep.
But most employees that are, plumbers, electricians, carpenters, it's not impacting them. If you talk to the vast majority of office workers outside of the coding field, they'll tell you some variation of this. My boss has instructed me that we have to use AI on a regular basis, and so I'm doing so, but I'm not sure how much more productive it's actually making me right now.
I tend to agree with a few industry exceptions.
Coding's the big one where you're seeing some real push on that side, and everyone I talk to in the tech space is like, yeah, this is going to, do the vast majority of coding work in short order. The other ones that I think you hear about it in the legal industry, doing a lot of document review and stuff like that, and then occasionally publishing fraudulent legal briefs as a result of that and making stuff up. Which
you saw in Australia with that famous attorney.
Yeah, which is kind of funny. So there's some places, but I think the big thing is you talk to the vast majority of workers, and they're not telling you about some productivity miracle that they're seeing from AI. It doesn't mean we're not going to see it, because remember, the Google's latest Gemini release that just came out now is one of the first ones, and it's one of the ones that people are talking about as being impressive. It's one of the first major releases on some of the new silicon from NVIDIA. It's one of the first things that, Blackwell has helped to develop. And when you get those next generation of chips, maybe you see further improvements and things like that. So just because we're not seeing it today, I'm not going to say, oh, it's never going to happen. That would be like looking at pets.com in 97 and being like, yeah, people buying all their pet food on the internet, no, not going to happen, when now we know that, Chewy and Amazon and all these things are things.
So let's forget about the bet on productivity for a moment here. And just admit that we don't know if it's going to lead to massively more productivity, if it's going to be a bigger productivity revolution than the internet. I don't know. What's different about the U.S. fiscal situation this time compared to the mid-90s to justify higher versus lower interest rates? That to me is a more interesting question, because the fiscal situation of the U.S. is, well, frankly, it's unrecognizable compared to the 1990s, right? We were running surpluses from the budget during the 1990s. Yeah. We had a U.S. deficit, a U.S. debt stack that was fractions of what it is now, even though it was considered to be too big even back then. It puts us in a very different position. And by the way, our population growth is a fraction of what it was back in the 1990s.
So I think that ultimately, you try to sort through, whether the Fed can, and this is even before you get into things like trade and reshoring and all this stuff. And where I tend to get to on AI and robotics as well is, if the actual technology works the way people think it can, it has the potential to be hugely deflationary. And deflationary is not a good thing. It's different from what we call disinflationary.
Yeah. If nobody's bringing home income because of robotics and AI, then prices are going to go down because nobody can afford anything.
Correct. When we talk about, what we want to see, it's an increase in standard of living through incomes relative to cost growing. That's what you like to see. If robots come in and replace all of our plumbers, carpenters, electricians, and all of our programmers and half of our, MRI, radiologists and, this and that, okay, like that's kind of a problem because all of that income goes away and we're not sure how to replace that. Like that's a huge demand problem that you then have in the U.S. economy. The thing people are hoping for is, hey, this can make us more productive so it's cheaper to do these things, but we maintain our jobs and our standard of living goes up because the cost of everything becomes cheaper. But if
Which, by the way, is how the implementation of every technology in history so far has worked. We have. Is it different this time with AI?
Our population has tripled in the last 100 years, quadrupled actually in the last 100 years. We employ 10% of the farmers that we used to, and we still feed ourselves. But it happened over a 100-year period. And anyone who actually talks to, a farmer now is like, wow, your job's still really hard and you might be underpaid for, what you do and yada, yada. So I think this is the challenge that we try to sort through in this is what shape does this boom bust potentially take? And the Fed and us have no idea yet still. Quick break here. Wall Street Watch is next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. Your home is more than just a place to live. It's part of your story. In retirement, real estate can play a powerful role in how you manage your wealth and plan for the next generation. Passing property to family members isn't always easy. One child might want to keep the home while another prefers to sell it. Maintenance costs, taxes, and distance to healthcare services are all important factors that need to be considered, which is why having a clear plan can help prevent family stress while keeping your wishes front and center. Our new guide, Owning Real Estate in Retirement, is designed to help you fit your property into a long-term strategy that supports your life today and preserves what matters most for your future. Get your free copy right now by calling 800-393-4001. That's 800-393-4001 or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family, including his father Victor and his brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Mark is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Mark Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about joint revocable trusts. Todd, a lot of people think estate planning is complicated or something they can put off. Can you explain how a joint revocable trust can actually make things simpler for couples who just want to protect what they've built and keep things easy for their family?
Sure. Joint trusts are really
so underutilized, but they're really the most important and easiest way to do planning. Many people think of two trusts, right? Splitting everything between a husband trust and a wife trust. Well, this already makes it simpler. If you have just one trust, you can both put your assets in the trust, whether you contribute the joint bank account or the joint brokerage account or the joint real estate and rental properties. It's easy. Just put it all into one trust and you're both trustees. So funding is simpler, operation is simpler, and most importantly, you can actually get a better result for moderate estates from an estate planning standpoint. Because on the first death, you get to cram down all the assets that are in the joint trust to get a step up in basis, whereas if you've separated the assets between the two trusts, you're only going to be able to cram down half as much. And if you do the planning right, you can actually use these trusts to get a double step up in basis when the surviving spouse dies.
Learn how you can avoid probate, eliminate estate taxes, protect your kids' inheritance, and keep your money in your family. Request this brand new guide from Cushing & Dolan. It's called The Simplicity of Joint Revocable Trusts. Call 866-848-5699. That's 866-848-5699. Or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, after last week's wild ride, markets are beginning this holiday shortened trading week in positive territory as traders await more economic data releases, including the Producer Price Index and retail sales, among others. Right now, the Dow is up about 1/3% or 149 points. S&P 500 is up just over 1% or 70 points higher. NASDAQ rallying 1.9% or 419 points higher. Russell 2000 also up just over 1%. 10-year Treasury yield flat at 4.054%, and crude oil down modestly, trading at $57.96 a barrel. Tesla CEO Elon Musk posted to X that the company has started work on the next generation of artificial intelligence chips to be used in cars and data centers. Tesla stock is jumping 6% on that post, sticking with AI, where Alphabet stock is rallying nearly 6% following glowing reviews of its recently launched Gemini 3 AI model. Meanwhile, Alibaba stock is rising about 5% after the company announced its AI app Qwen had 10 million downloads within its first week of launching. Elsewhere, Novo Nordisk sinking about 7% after the pharmaceutical company said its highly anticipated trial for Alzheimer's disease failed to meet its main goal. Over the weekend, Wicked for Good had an impressive box office debut where ticket sales totaled about $150 million, which would mark one of the biggest domestic debuts this year. However, shares in Universal Pictures owner Comcast are down just over 1%. And struggling retailer Kohl's has named Michael Bender as its new CEO, marking the third CEO that the department store has had in the last 3 years. Bender has been serving as the company's interim CEO since May. Kohl's stock is down modestly so far today. I'm Tucker Silva, and that is Wall Street Watch.
All right, so one of the things that was one of the pieces of information released last week by the Bureau of Labor Statistics is that the October CPI, kaput. It will not exist in a full final form. This is the first time that we have seen this since we have had instruments available that basically are built to track the CPI in investment vehicles. Think about treasury bonds that are indexed for inflation, TIPS bonds, as they're more commonly referred to, treasury inflation protected securities. So the question that people ask is, okay, like, how does this actually work on something like that or in other areas of the market where you need a reading from the October CPI in order to be able to produce a result? And the answer is that the contracts for these have different covenants in them requiring fallback data to be used in order to actually, provide some kind of reading for the value of the instrument. So as an example, for tips, this is according to, again, the guidelines for how tips work. You have to use a synthetic number, quote, based on the last available 12-month change in the CPI. So in this case, you would use CPI from September of 24 to September of 25. But then if you go to the inflation derivatives market, they have a different fallback that they use that instead uses swap-based numbers in order to provide their fallback from an officially released CPI. So what you end up with here is that you get a divergence in payouts depending on the fallback mechanism that is used that diverges to the tune of about 0.2% over the last year as a result of this. So when we talk about the impact of not getting an October CPI, look, ultimately, I don't think anyone wakes up and looks at their bank statement in the morning and then he gets the CPI and says, oh, inflation wasn't as bad last month as I thought. No, you spent the money you spent and that's how it is. But these are some of the ways that this actually creeps into market functioning and how you can see, some funky things that might be there when you're trying to figure out some of these items in markets.
I think what this comes back to for me, Chuck, is over the last 100 years, there has been a tremendous amount of trust built for the U.S. financial system as a whole. And I know that sounds kind of strange coming from people because, people are probably listening I don't trust bankers on Wall Street. That's not what I mean.
Right.
What I mean is that internationally people settle trade in U.S. dollars. When they trade with other countries, they want to use U.S. dollars because they know that it is the most stable currency and capital system out there. And 1 month of missing CPI does nothing to damage that.
No.
But when we talk about why investors don't settle funds in Chinese yuan, for example, it's because you don't trust the data that backs up the financial system. And again, like I said, one missing inflation read doesn't do anything to damage that reputation, but potential changes to how CPI gets calculated, if you have, people that are someday messing with the data or saying, hey, we don't want to release it on a monthly basis anymore, those are the things that we deem really concerning, because any drawback of trust from the U.S. financial system and, the data that frankly sometimes seems pretty unimportant, like monthly CPI reads, actually is really important to the functioning of the overall U.S. financial system, which we all as Americans benefit from dramatically.
Yeah, this as you said, this isn't going to cause anyone to rethink that type of investment. But it is something where if you start to see more and more of these pockets that pick up, eventually you get to a point where, and again, there needs to be a lot more. We're nowhere near this
Correct.
right now. But eventually you get to a point where, a pension fund that's, overseas says, yeah, we need to rethink our capital allocation just because there's a material risk related to the quality or quantity of data being provided on instruments X, Y, and Z. And that's where it starts to matter. This won't, but just give you an example. Look, let's say that you're an institutional investor in wherever. Let's even say you're an institutional investor in the United States.
Right.
And you have an allocation to tips in your portfolio. And if you miss this CPI reading once, you say, whatever, it's not a big deal. It happens, every month, and as long as we have data going forward, it's fine. If long shutdowns and missing CPI data become the norm, then institutions may say, look, we buy these investments in order to hedge against inflation in our bond portfolio. If the data is not being provided such that they are not doing that hedging, we are not going to buy them. And then the U.S. government has a funding problem related to, now you've got to change the mix of your securities that you issue. You issue fewer tips and more conventional bonds, and maybe the yield rises as a result of that. So, again, a one-off, quite honestly, I'll go far enough to say it doesn't matter.
Agreed.
But if this becomes something that's happening once a year, which I don't think we have evidence of that, but if it were to, it starts to become kind of problematic if you get to a frequency like that. I'm going to wait for that to happen before I start to say, this is a problem. Because quite honestly, if it's just once and doesn't happen again, it's a non-factor.
Agreed.
Americans are on a year-end shopping spree. I've seen so many divergent stories about
Chuck,
this.
This is typical. So every year around Halloween, a bunch of companies go out there and start talking to consumers. And what they ask them is, hey, are you planning on spending as much as you did last year, more than last year, or less than last year on the holiday season?
Sure.
And universally, everyone says, oh, I'm going to pull back my spending because, that credit card bill that I had to pay off was really painful. And then you ask them again in mid-November or late November or early December, and it's like, oh yeah, we are spending like crazy. Have been at TJ, we've been at Home Goods and TJ Maxx every night for the last 2 weeks, and I'm definitely going to all the Black Friday sales. So
yeah,
this is not unique. This is typical. Every single year we deal with something. And by the way, I'm not saying that every retailer out there is going to have a great quarter. There will be winners and losers, but every time I read one of those stories like, corrugated box shipments look bad or consumers are saying that they're going to pull back on their spending, I usually just kind of ignore it and say, let's take a look at it in January, because my guess is that the holiday shopping spending goes up by some 2% compared to last year.
You know what I think we can say conclusively at this point?
Sure.
Any concern related to spending from households that, became... Any concern that we had because of what we were seeing in restaurant spending trends, which are real, there's a problem there.
Yep.
It's not spilling over into the rest of retail.
Doesn't appear to.
You can't look at anything out there in the broad macro picture for retail and say, yeah, this is the problem. It's basically restaurants are continuing to report some pretty concerning things. Travel amongst lower income households is still not doing particularly well. But retail spending on pretty much anything else seems to be cooking along at that standard 4 to 6% growth rate that we've been at all year with no change.
Yeah.
Let's take a quick break. When we come back, we're going to cover this piece, but not for the reason you think. It's the Wall Street Journal analyzing 5,000 earning calls to figure out what CEOs think about tariffs. We'll discuss that when we return.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. Your home is more than just a place to live. It's part of your story. In retirement, real estate can play a powerful role in how you manage your wealth and plan for the next generation. Passing property to family members isn't always easy. One child might want to keep the home while another prefers to sell it. Maintenance costs, taxes, and distance to healthcare services are all important factors that need to be considered, which is why having a clear plan can help prevent family stress while keeping your wishes front and center. Our new guide, Owning Real Estate in Retirement, is designed to help you fit your property into a long-term strategy that supports your life today and preserves what matters most for your future. Get your free copy right now by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family, including his father Victor and his brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Mark is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Mark Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
The U.S. Virgin Islands isn't just a postcard. It's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Maggins Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all three. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Piece in the Wall Street Journal. Answering the question that everyone wants to know. Do CEOs actually care about tariffs? The study that no one wanted.
So
here's the thing. Okay, I'm going to make my view very, very simple. CEOs, the Wall Street Journal covered, they studied whether or not CEOs were talking about tariffs positively or negatively on their phone call, on their earnings calls. Guys, if you know it's going to antagonize the Trump administration to talk about tariffs on your earnings calls, you are not going to talk about them on your earnings calls.
These are public. These are not private earnings calls between you and the Wall Street Journal.
Right, like see Amazon earlier this year when in a span of a morning they did an about face on whether they were going to slap a tariff surcharge on prices.
Remember that? They were going to publish it right on Amazon.com when you went to buy an item. This is the estimated
lasted for like
tariff.
90 minutes, by the way.
It was not very long time.
So I think that this study is worthless because even if corporate CEOs are, thinking or actually making changes as a result of tariffs to their business, they're not going to go out and tell you directly on their conference call. They'll just figure out ways to make it happen under the surface and it'll happen. So I think that's my view on this. I don't know where you were going to land.
I found it completely useless because, once again, the Wall Street Journal has a tendency to put together some really useless charts, and you have another one here, the share of earnings calls addressing tariffs, in which executives discuss tariff risks, and it's a percentage, and they have these different, just useless to me. I think the big picture, the only thing that I can draw from, conclusions about how CEOs feel about tariffs, and this does not come from the Wall Street Journal, it's just the general consensus that the Journal agrees with, is that CEOs were deathly afraid of tariffs in April on Liberation Day and are a lot less concerned about it today.
Well, and look, here's the thing that I'll say about this. What matters for anything in the economy is the rate of change from where you were prior. Tariffs, in my opinion, are not a huge factor in the economy in 2026 either way, whether upheld by the Supreme Court, rejected, or anything in between. And the reason why is because the greatest possible risk is when something is first announced and that big shift, like what we saw in April of this year, that can't happen again unless like you see like a similar, announcement going forward. But once they're in place, it's not like you just they don't just wear on you forever in that same way. It's okay if you keep announcing more and more and changing the policy. Yes, that's a problem. But ultimately, if tariffs haven't caused problems in the economy to this point, they're not going to.
Right.
And
there could be trade issues in our future. They don't really involve the rate of tariffs. They involve whether or not China wants to give us rare earth materials and to what extent we are willing to give them semiconductors. That's the only trade issue that really matters.
The U.S. Virgin Islands isn't just a postcard, it's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with Cruise Hub energy, duty-free shopping, and panoramic views at Megan's Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all three. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com.
Mike, we got a problem in beef world.
Yeah.
Tyson Foods is going to be closing one of its largest beef processing plants in Nebraska. It's in Lexington, Nebraska, and it employs about 3,000 people and slaughters almost 5,000 cattle per day.
Which on the surface seemed surprising to me, given the only thing I'm focused on about beef is that prices are through the roof. I would think that allows Tyson to widen margins and make a little bit more, but ultimately it looks like this is much more of a volume business than a price business.
It is, and this is the issue, is that apparently, and again, I'm no expert on the the beef processing industry.
Chuck, to be quite honest, if I knew that I was going to have to cover a story about beef, there's not many people I would know that I would go to prior to asking.
I'm as close as you can get to an expert without being an expert.
Yeah.
But here's the deal. It's like any other factory. You have to operate at max volume for as long as possible because it's a low-margin business. And so when you have shrinking herds for a variety of reasons, you don't get the volume of cattle going through. And Tyson makes the decision, hey, we've got to close this because you can't just scale down to 50% on this and expect it to still work. Even in another one of their facilities in Amarillo, Texas, they are moving to a one shift per day setup because, again, you can't just tell like 80% of the people to come in for 2 shifts per day. It doesn't make money if you're running the equipment and facility round the clock like that. Instead, you get rid of a shift, and then if that doesn't work, you close the plant because that's the only way you can get there on it. I did happen to have a lovely rib roast over the weekend that I did, and I don't know if it came from this facility, but gosh, it was tasty. Getting the holiday season kicked off a little bit. We're going to take a quick break. Hour 2 coming up in a little bit.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network. Estate planning doesn't have to be complicated. Cushing & Dolan's new guide, The Simplicity of Joint Revocable Trusts, shows couples how to stay in control, avoid probate, and help protect what they've built for their family. Call 866-848-5699 right now and ask for your free copy today. That's 866-848-5699. Or request it online from our website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Mark Vonner is the CEO of Veterans Development Corporation. His dedication to serving our veterans has made an incredible impact on his family and employees. And he is so proud to be the presenting sponsor of the DAV 5K Boston.
This is Brittany Vonner. I'm a registered nurse who is now working as an assistant project manager at Veterans Development Corporation. Working with my father, Mark, has been an incredibly rewarding experience. Our company is dedicated to serving VA hospitals and veteran communities. We don't just build facilities, We build environments that support healing, resilience, and family. We are so proud to see our work directly impact the lives of veterans and the professionals who care for them. This rich history is why we care so much about supporting great organizations such as the Disabled American Veterans Department of Massachusetts in the work they do to care for our veterans.
Join Veterans Development Corporation in thanking our great American heroes. Please visit dav5k.boston to show your support today.
The U.S. Virgin Islands isn't just a postcard. It's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Maggins Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all three. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Owning Real Estate in Retirement. Mike, for someone who wants to own multiple properties in retirement, maybe a warm weather and a summer property, what do you end up doing as far as, trying to negotiate and navigate that decision?
Well, it's a lot of questions to answer. How much time are we going to spend in one place versus another? Where am I going to be a resident? If I am, leaving between two different homes, where do I feel comfortable being a resident? I get this question all the time. How much will I get in tax savings, for instance, by moving to a no income tax state? And what ends up happening, though, sometimes is they make that decision based on income tax and don't realize where a lot of the cost savings comes, which is estate taxes. And so if I'm going to own multiple properties, where do I intend on actually making my residency? And will I be able to commit to that for the long term is an important one.
Another piece there, look, at a certain point in everyone's life, that travel and moving between two places and even maintaining two places becomes challenging. When do you typically see those kinds of conversations being navigated?
For most folks, I see it in the 70s and early 80s. That's when this stuff starts to change for a lot of people, but ultimately it's customized to each individual, and you might be able to afford one scenario if you're willing to rent out your property for a period of time. Sure. It really comes down to customizing for your situation.
Our guide this month is titled Owning Real Estate in Retirement, and you can request it by calling 800-393-4001 or going to armstrongadvisory.com. That guide again is titled Owning Real Estate in Retirement, and you can request it by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike Tucker with you, and as we kick things off here, we've got a whole bunch of green on the board to start Thanksgiving week. Dow Jones Industrial Average up about 0.7%, 319 points. The S&P 500 up 87 points, about 1.3%, and the NASDAQ Composite up, let's see, we've got, about 2%, 476 points. So we got all of the major U.S. indices, even the cute little Russell 2000 up about 1.25%. So we got all of them in positive territory as we start the week. U.S. 10-year Treasury down 0.6 of a basis point. Not worth getting out of bed for that. It's at 4.057%. Dollar index up 0.01%. Those currency traders really, making their money today. It's at 100.125. We got gold up 10.70 an ounce to $4,090.20. And crude oil, West Texas Intermediate, up 8 cents a barrel to 58.14. We do have a chance later this week, though, to see the AAA national average for gas prices get below $3 a gallon. A bunch of the refineries that have been closed recently have reopened. Gas prices down 0.4 cents in the last week, but potentially some acceleration there right as you head into one of the busiest travel weeks of the year. So potentially some good news if you are going to be on the road in the next week or so. You might see some gas a few cents cheaper than it is today.
I think one stock worthy of mention, Eli Lilly, today became the first ever healthcare company to cross the $1 trillion market cap threshold.
I believe it's called the Quattro Commas Club.
The Quattro Commas Club. Oh, I like that.
Yeah. It's not an original thought.
No.
It's stolen from Silicon Valley. There was the Trace Commas Club, $1 billion club.
Yeah.
This is the Quattro Commas Club. It's not quite as catchy as Trace Commas, but Quattro Commas, sure, we can make it work.
Our appetite for weight loss drugs.
I like that.
Pretty substantial.
Yeah. How's that? Let's talk a little bit about this piece from CNBC. Tucker, do we have any dramatic music that you can play?
You can just hum it.
No.
Can you hum? Kazoo?
I don't know.
You got any kazoos doing Star Wars or something like that?
What?
Because that's kind of what this piece is. Could markets be facing an everything bubble? Investors are divided. Yeah, gee, with a topic like that, how could you not be divided? How would we define an everything bubble, Michael?
I don't know, because last time I checked, tulip prices still pretty reasonable compared to the 1400s or whenever that tulip bubble was. Was it the 1400s?
Whenever.
So,
I mean, I feel like when we're talking about
we're not having a tulip. We're not having an everything bubble. Everything bubble would mean everything.
Am I in a bubble? I feel like I'm Austin Powers. Help! I'm in a nutshell. Is that me in a bubble right now?
1636, by the way, was the Dutch tulip bubble. I was off by 200 years.
So
it's pretty bad. I'm sorry.
How is this piece even defining everything bubble?
Real estate, crypto, artificial intelligence stocks, every other stock. But again, if you want to go through the 500 companies in the S&P 500, I do think you will find a few of them at least that are reasonably priced compared to their long-term average. So, no, I don't think we're in an everything bubble.
So let's just knock off a few of these just right off the bat. Housing is not a bubble. The prices are unaffordable.
That does make it a bubble.
Bubble implies that it has to pop in kind of violent fashion. And I just don't see that happening with housing. I could see some sideways drift for a few years, but just because something's unaffordable doesn't make it a bubble. The next one that I want to address is crypto. If the default state of something is a bubble, can it ever actually be in a bubble? Because this is what crypto does. It goes through these massive run-ups for a couple of years, then massive drawdowns, then massive run-ups. That's just the state of nature with it. You wouldn't, get upset at a cheetah for chasing the gazelle. Do you get upset at crypto for going up and down crazily since it's not tethered to anything real?
No, I'm just trying to think if there's been any other asset class similar to it in that way. But I struggle to think of one. I'm sure there's some emerging market countries' stock prices that have seen something similar, but I hesitate to come up with it.
So crypto, I just accept, hey, it's going to have crazy swings. Some of them are up, some of them are down. It can't be a bubble because there is no intrinsic value. There's no earnings per share.
Investors aren't divided on this subject.
From which perspective?
That we're in an everything bubble.
They're not?
No. The CNBC is saying that they're divided, but
Oh.
investors are not divided
No.
on whether or not we are in a everything bubble.
No.
Investors right now are concerned that we may be in an artificial intelligence and related companies bubble.
We could be in a something bubble, but not an everything bubble.
Yeah. I mean, am I missing something here?
No.
Like, bond prices, I guess a lot of different asset prices have inflated, but that is very typical of a period of time where you've seen dramatic stock price appreciation. Like, the junk to treasury yield spread is pretty narrow, meaning people are not pricing in a whole lot of risk for junk bonds. Does that mean that it's a bubble like nothing we've ever seen, as the everything bubble term would insinuate? I don't even fundamentally understand what this means and what people would be divided about.
I don't feel even that we are more bubblicious than we were at the end of 2021 as an example. Like, yes, in terms of scale, if AI turns out to be a horrible, a horribly bad allocation of capital, from a scale perspective, it would dwarf anything else that we've seen.
It's a really good point, Chuck. Just think back to 2021. It did feel more ludicrous then. At least in 2025, there is a narrative to attach to the fantastic prices that we are seeing everywhere.
Something awesome could come out of this.
In 2021, there was nothing. It was just, we have too much money, and we are willing to gamble on anything from South Korean baseball to meme stocks.
You want to push a truck down a hill? There's a stock for that. You want to... again, a lot of them
SPAC mania, all of that stuff. There was no semblance of I guess the best argument you could have was that EVs were going to be 70% of the world's fleet of cars.
But even there, you and I had these conversations in 21 where we said, guys, there's a reason why no one starts car companies. They are literally money pits.
Yeah.
It's a hole that you dig in the ground. You put all of your money into it, and there's a 1% chance that you get any of it back. And it's it was very obvious that you couldn't actually make that much money on EVs. On artificial intelligence, there's a non-zero chance that you can't make any money on it.
Hold on.
There's a real chance,
that you can make no money on it.
There's a chance you can make no money on it.
Sure.
But I do acknowledge, hey, if you can actually do some of the things that you're talking about,
sure,
it's a multi-trillion-dollar market.
Yep.
And so I understand why you're
somewhere
doing that.
Between there.
The car companies made no sense.
Yeah.
And we said it at the time. It's like, guys, who's going to buy all this stuff?
Right.
This, it's kind of like, yeah, if you could actually invent a robot that, you can sell for X thousand of dollars and it does all of your household chores for you, I could see the market for that.
Yeah. If you have an artificial intelligence that is so good at gleaning data that it allows you to come up with new drug combinations to treat diseases that we can't currently figure out.
I could see a use for that.
Wow, yeah, that could be a huge market. Look at what we're seeing already with weight loss drugs. Imagine if it could do stuff with other things because of artificial intelligence being better at this than the current tools we have. So
if you've got a robot that can swing 8
there.
hammers at once and finish a house in a day, okay, I get the use for that. In 2021, it was just all insane stuff. This stuff might end up being not real, but you understand the draw to this in a better way than just, hey, here's... I mean, wasn't 2021 when stuff like Dogecoin started? And it was just here's a picture of a dog on a meme coin.
Or what were the artwork, the digital artwork, NFTs?
Yeah, there was the NFT peak. Yeah. Right, but I mean, the counter to this is you got Labubu's now. Or is it Labubu's?
Labubu's. Yeah.
Yeah.
Yeah. So.
It's hard, I put this in a different bucket from 21 because 21 was just a bunch of things untethered from reality. This is a bunch of things that may change reality. We're just not sure if they will yet. Let's take a quick break. When we come back, let's do a little bit of trivia. And are we going to do Blue Owl or the affordability crisis, Michael? Why not both?
Yeah.
Right after this.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network. The U.S. Virgin Islands isn't just a postcard. It's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Magens Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all three. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. Your home is more than just a place to live. It's part of your story. In retirement, real estate can play a powerful role in how you manage your wealth and plan for the next generation. Passing property to family members isn't always easy. One child might want to keep the home while another prefers to sell it. Maintenance costs, taxes, and distance to healthcare services are all important factors that need to be considered, which is why having a clear plan can help prevent family stress while keeping your wishes front and center. Our new guide, Owning Real Estate in Retirement, is designed to help you fit your property into a long-term strategy that supports your life today and preserves what matters most for your future. Get your free copy right now by calling 800-393-4001. That's 800-393-4001 or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Planning for the future is challenging. At Cushing & Dolan, we believe that sometimes the simplest step can make all the difference. A joint revocable trust allows married couples to stay in control of their assets while making sure those assets are distributed properly. Our new guide, The Simplicity of Joint Revocable Trusts, shows how couples can take advantage of both the $13.99 million federal exemption and the $2 million Massachusetts exemption without losing benefits when one spouse passes away. This trust may help you avoid probate, reduce estate taxes, and even provide a step up in basis that can save your family money when it's time to sell your home or investments. Learn how to make your estate plan work smarter, not harder. Call 866-848-5699 right now and ask for your free guide today. That's 866-848-5699. Or you can request it online from our website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is powered by Circle K Convenience Stores. Circle K is now the official convenience store of the DAV Department of Massachusetts. On behalf of Circle K, thank you, veterans, for all you've done. Time for trivia here on the Financial Exchange, and today's the 84th birthday of the Beatles' original drummer. Ringo Starr didn't join the band until the group returned from their 2-year residency in Hamburg, Germany, when their original drummer was fired. So, trivia question today, who was the first drummer for the Beatles? Once again, who is the first drummer for the Beatles? Be the sixth person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. You also have to use the keyword trivia in your text. So text the keyword trivia to that number, 617-362-1385, and you win a Financial Exchange Show t-shirt. Once again, the sixth correct response to text us to the number, 617-362-1385, along with the keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
I guess the headline writers are just pulling out all the stops today. We got this one from Bloomberg. Blue Owl is the sum of all investor fears. Okay, so here's the deal. Blue Owl is an asset manager. They manage about $300 billion.
I was going to say, isn't that the name of a famous movie? It was. The
Sum of famous movie, a famous
book, right. Sum of all fears.
Morgan Freeman,
okay.
Ben Affleck.
Yeah.
I think it sucked.
Tom
right?
Clancy.
Yeah.
Okay.
It's a very C+ Tom Clancy movie. Like, there's much better ones if you want to go like Clear and Present Danger or something like that.
Okay.
Anyways, I digress. Blue Owl, they manage about $300 billion. About half of that is in the private credit space, which basically means that they make loans to companies that are not through public-facing bond markets. And I'll just quote here from Bloomberg because I do think they actually sum it up well. Blue Owl Capital is caught in a trifecta of market worries about private credit, artificial intelligence, and the flightiness of wealthy individuals who have been the new growth hope for alternative managers in recent years. The reason why that last one matters, typically private credit space, kind of the exclusive domain of pension funds, insurers, but
they needed more money, so where do they go?
They said, yes, we want to, start tapping, wealthy individuals, same way that private equity firms have, and hedge funds, and so on and so forth. And now they're trying to put it into your 401k. Ultimately, what we have here is a question of, do the companies that Blue Owl and subsidiaries and other people have lent to, do those companies have enough money to pay back the debt they've taken out?
Right.
There have been a couple of high-profile instances where firms funded by private credit have not been able to in recent months, mostly in the auto sector, but there was one in the housing sector as well. And so you've kind of got this drumbeat out there where no one's quite sure what all this stuff is worth. It's compounded by a couple of other bankruptcies or defaults in the last month or so in this space where companies were having their loans fully valued by their issuers right up until the day when they said, nope, you can't pay anything, and we're actually going to write this down to zero.
Right. So you can, to some degree, understand the frustration by the CEOs in this space. At Blue Owl, for instance, the average annualized credit losses are running at 0.13% of total loans. And so one of the CEOs is out there. They have co-CEOs at Blue Owl and kind of giving these exasperated speeches of, why did the narrative turn here? There's no real problem, yada, yada. Also acknowledging for a moment that his company only works if they do have a market to continue to lend out new money and buyers for that debt. So he's got some vested interest in making sure that this gravy train continues. But to his point, there have been very few defaults in this space. There is, generally no aggregate looming issue. But when you have 4 really public defaults, and it can quickly change the narrative over to this being a real problem. And so, as we said before, it's going to take some time to kind of figure out. But for some time, these companies have been claiming to their investors and to the general public that they are just much better at underwriting than previous issuers of this type of debt. And I think that statement has been called into question with some of these big defaults that Blue Owl, by the way, wasn't really connected to in any way.
No. And I think here's the question that I think is worth asking then. If you're actually that good at underwriting this debt, And if the default rate is that low, then why are the interest rates that are charged to the companies borrowing through private credit markets in the low double digits right now? Because if there really isn't that much risk in them, then why do you have to underwrite
plenty
it?
of borrowers willing to.
Why won't
plenty
more,
of lenders?
Why
out there
won't more
giving money.
lenders lend to these companies at 7, 8, 9% instead of 12, 13, 14%?
Yeah,
that's the one that's out there and that I have a hard time getting my head around. Which is, yeah, if you're really that good at it, why is the market pricing it as if it's still kind of junky debt?
I don't think you're a monopoly. You're not the only place that can go lend out money to small borrowers.
No, there's dozens of these companies
Yes.
that do this. Even at this scale, there's dozens of these companies that do this. Everyone's talking about the affordability crisis. It can't be solved. I agree with this piece from Greg Ip. The tools that governments use in order to manage their constituencies at either the local, state, or federal level, we do not have tools to make things more affordable.
No.
We don't.
We do, and
I take it back. We do. The tool to make things more affordable is competition and allowing companies to have to compete on price in order to make things more affordable.
Yeah, I was going to say,
or raise wages, which makes things more affordable.
Affordability is a contributing factor of two things: prices and wages.
Yes,
and I would argue trying to lower prices or hold them where they are
can't do it.
Is a hell of a lot more difficult than trying to create conditions under which wages can increase.
Competition raises wages and lowers prices because you have to compete for labor and you have people that you're competing against on price.
But it's easy to get confused about that, and so we're going to probably test some of the dumb policies that we've had before, such as $20 fast food minimum wages and rent control and all sorts of fun things, which I heard, by the way, is making it onto the Massachusetts ballot, some rent control measures here in the state. So exciting news to come.
Let's take a quick break. When we come back, we've got Wall Street Watch, we've got the trivia answer, and then we'll discuss whether the real poverty line is $140,000 in income.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. Your home is more than just a place to live. It's part of your story. In retirement, real estate can play a powerful role in how you manage your wealth and plan for the next generation. Passing property to family members isn't always easy. One child might want to keep the home while another prefers to sell it. Maintenance costs, taxes, and distance to healthcare services are all important factors that need to be considered, which is why having a clear plan can help prevent family stress while keeping your wishes front and center. Our new guide, Owning Real Estate in Retirement, is designed to help you fit your property into a long-term strategy that supports your life today and preserves what matters most for your future. Get your free copy right now by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
The U.S. Virgin Islands isn't just a postcard. It's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Magens Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all three. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about joint revocable trusts. Todd, for couples who already have wills in place, why might it make sense to look at a joint revocable trust, and what can it do that a simple will can't?
Yeah, this is important because a lot of people believe that wills are an estate plan, when really a will is a won't. I've said it many times. It won't avoid probate. It won't reduce estate taxes. It won't protect assets from the nursing home. You're going to need some kind of trust to do that. So that's the most important reason why a will is not enough. Then you need to think about, well, what kind of trust are you doing? Well, in this case, we're talking about joint trusts. And boy, folks, these are so underutilized, but they are really powerful for moderate estates. And today, moderate estates are, below 15 million with the exemption as high as it is. So you can actually make it easier for folks. Put all the assets into this trust. You can jointly put your brokerage accounts and real estate in the trust. It's simple. You don't have to split assets between two trusts. Ease of operation, and it's going to reduce estate taxes, avoid probate, and provide a bloodline plan for your family, even to the extent where if you want to protect it from future creditors and divorces of the kids, you can do that in the trust as well. And the will won't do any of that.
Cushing & Dolan have been helping families like yours for more than 40 years now. Learn how you can avoid probate, eliminate estate taxes, protect your kids' inheritance, and keep your money in your family. Request this brand new guide from Cushing & Dolan called The Simplicity of Joint Revocable Trusts. Call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, after last week's choppy ride, markets are beginning the holiday shortened week well into positive territory as traders await more economic data releases, including the Producer Price Index and retail sales. Right now, Dow is up over 0.5% or 260 points. S&P 500 is up 1.4% or 91 points. NASDAQ surging 2.3% higher or 517 points. Russell 2000 is up nearly 1.5%. 10-year Treasury yield is flat at 4.054%, and crude oil up about 0.5%, trading just above $58 a barrel. Tesla CEO Elon Musk posted to X that the company has started work on the next generation of AI chips to be used in cars and data centers, sending Tesla shares up by 7% now. Sticking with AI, where Alphabet stock is rallying nearly 5% following glowing reviews of its recently launched Gemini 3 AI model. Meanwhile, Alibaba stock is almost 5% higher after the company announced its AI app Qwen had 10 million downloads within its first week of launching. Elsewhere, Novo Nordisk shares sinking about 6% after the pharmaceutical company said its highly anticipated trial for Alzheimer's disease failed to meet its main goal. And struggling retailer Kohl's named Michael Bender as its new CEO, marking the third CEO the department store has had in the last 3 years. Bender has been serving as the company's interim CEO since May. Kohl's stock is now edging higher. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question, who was the first drummer of the Beatles? Well, that would be Pete Best. And our winner today was John from Portsmouth, Rhode Island, taking home a Financial Exchange Show t-shirt. Congrats to John. And we play trivia every day here in the Financial Exchange. See complete contest rules at financialexchangeshow.com.
All right, Mike, we have to have a conversation about the federal poverty line.
Yeah, we might need to define what poverty actually means as part of this, but the federal government does produce a level of income where you are considered impoverished.
Yes. And that basically that limit, if you look at it, it varies based on family size, as you would expect.
Sure.
If you are a just single individual living on your own, it's below $15,650 this year. If you have, if you're married or it's two of you living together, it's about $21,000. If you have 12 kids, it's about $87,000. Not many 12-kid households these days, so it's probably in the minority. But basically, the federal poverty line is it's defined basically so as to have it's the minimum income level to meet some basic needs such as food, housing, and healthcare, and it gets updated annually.
And not coincidentally, the federal minimum wage at $7.25 per hour, if you worked a full 40-hour week for 52 weeks a year, would get you about $15,000 in income.
So there is a manager at Simplify Asset Management by the name of Mike Green. I'm familiar with Mike's work, and I think he's generally a pretty sharp guy, actually. But he basically looked at a bunch of different data points and said, no, if we're actually looking at what this, should be defined as, that limit is closer to $140,000. And I just don't think that holds up when you, actually look at this.
I am willing to say that at $30,000 a year, that's the level for the family of four, right? It was around 30.
Let me pull it up for 30. It's
32,000.
32,000.
I'm willing to say that even under $40,000 or $50,000 in most parts of the country as a family of four, you are impoverished at levels of income higher than $32,000. I'm really not willing to get to the $140,000 level.
No, and here's why, in my opinion, it doesn't make sense. First, you look at the stuff that is included in here, and just as an example, $32,000 a year for childcare. There is no world in which that is what you need to spend on childcare year after year after year.
Likewise, if you are earning $32,000 a year in income, there's almost no way that you are choosing to engage a childcare provider.
Correct.
For $32,000
you will just stay
That's a
home
luxury that
and
you don't take.
not work.
Right.
$23,267 for housing. That's $2,000 a month in rent.
Yep.
I can tell you, in some parts of the country, it's going to be really hard to find a place for under $2,000 a month in rent.
Sure.
In large swaths of it, you can absolutely find a place for under $2,000 a month in rent.
Mm-hmm.
$14,717 for food. And again, this was looking at a family of four. So it's about $1,000, $1,200 a month, we'll call it. So about $300 a week. Guys, I got to tell you, I do my grocery shopping for my family every single week. And without having to manage things tightly, and we're a family of four, we're generally right around that level. If I wanted to actually coupon clip and bargain hunt and really do some work on it, I could get that down by at least 30%.
In either case, and by the way, I'm taking Massachusetts data here as an example. For a four-person household, if you were earning less than $5,200 a month, then you qualify for SNAP benefits. No. And so we have some government intervention here that's confusing this matter further.
Another one, $14,828 for transportation. Guys, I can tell, again, this might be the average spending that you see out there, because, again, this was national average data. Below the national average is not poverty. There's another, line before you get there. $10,000.
By the way, that $14,000 number is 100% absolutely impacted by the average price for a new car.
Correct. Or even a car in general. There are plenty of ways to get transportation in many parts of the country that don't involve buying a new car, and might be as simple as a bus pass for each month that might be a couple $100 or something, or a train pass each month for a few $100s. It does not have to be $15,000 for transportation. $10,000 for healthcare. Honestly, no one knows the cost of healthcare. I'm not going to put up a fight there. If you want to tell me that that's what it is, when you include all your deductibles and out of pocket and this and that. Fine.
I'll say that according to Fidelity's annual study that they do on retirees, that a single individual who's retired is expected to spend some $6,000+ a year on healthcare. So it wouldn't surprise me that $10,000 for a family of 4 would be the kind of bare minimum.
And then $22,000 for other essentials. I'm guessing that's clothing, and I don't know how you get to $20,000 for other essentials. That seems like a lot for essentials.
Yeah.
In any case, if we want to make an argument, hey, the federal poverty line for a family of 4 should be $50,000 instead of $30,000. I think we can have a reasonable conversation there. $140,000, I don't think we can have a reasonable conversation.
Yeah, seems a little bit off. It does remind me of a point, though, Chuck, that I know you and I have talked about at length, which is there's always, in everyone's circle, keeping up with the Joneses mentality. And we see that expense creep with clients that we work with all the time. And I've said this publicly a few times, where I have met families who are pulling in $500,000 or more and are in terrible financial health. They don't save anything. They rack up debt. They are not going to save enough to retire on. And I've met families that have earned at most $100,000 a year and are in excellent financial health without long-term debt, without credit card debt, and enough savings in their retirement to afford their lifestyle. And that's where it comes down to that discipline and that understanding of what your future is going to look like, to save properly for that future. If you are trying to assess where you are in that saving journey that we all have to embark on in our working years, and you're trying to figure out, hey, what is my dollar amount that I need to get to? What is my age that I need to get to before I can afford to pull back from work and retire and live comfortably for the rest of my life? That's what Armstrong Advisory Group does every day when working with our clients. If you have those types of questions, I urge you to call us at 800-393-4001 and get your free financial checkup. The number again for the Armstrong Advisory Group, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's see. I kind of like this piece here, how spouses retiring at different times can avoid money clashes. Because I've seen this firsthand, actually, with you have a couple who, someone's 75, someone is 62 in the relationship, and the 75-year-old is quite literally, in some cases, being like, hey, I'm going to die soon. We got to spend some money.
Yeah.
And the 62-year-old's like, I might have 30 or 40 years left. I don't want to be broke.
Yeah. You have to be... Look, it's not to interject myself into spouses, into a couple's life, but there are added risks when you are, I would say, marrying somebody that is greater than 5 years your age difference.
Yeah.
Right? Like, you think about that example, and I've seen it before, right? The older spouse has a pension. How much homework did you do to make sure that there's a survivor benefit on that pension? Or if they were the primary income earner, when their Social Security goes away, that I'm going to have something left over. It's a little bit easier these days with investments making up a larger portion of it.
Sure.
But there's a lot of those types of questions that don't apply to a couple that's both turning 65 the same year. The other one that I always ask people when there's an age difference and somebody's retiring, it's how comfortable are you with seeing your spouse not go to work every day? Because that's a challenge when that spouse is, heading to the golf course or spending time with the grandkids and you can't because you're commuting to work. It's a real pain point in some relationships.
Oh, I mean, I never went through that, but I can tell you as like a 25-year-old, a couple roommates at the time, and one summer they both got into business school and took the summer off, and I'm still working. I'm kind of looking at them, and I'm like, they're literally just like going and, again, like hanging out at the beach every day.
Yeah.
And I'm sitting there, I'm like, guys, I don't think we can do this long term. This isn't going to work. So, yeah, I can relate to that a little bit. Let's take a quick break. When we come back, Stack Roulette.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served nearly 20 years, and we are so proud to have him and his business as a key partner and a presenting sponsor of the DAV 5K Boston. The DAV Department of Massachusetts does incredible work, and it's one of the first organizations that Mark became familiar with after his military service ended back in 1984. As Mark built his company, he knew he'd be giving back to fellow veterans who needed jobs, support services, medical supplies, and so much more. Mark works with disabled veterans every day, and it's one of the key reasons why he's such a big supporter of Dan Stack, the DAV Department of Massachusetts, and the DAV 5K Boston. You can join Mark Vonner and his team and make a donation to the DAV Department of Massachusetts or become a sponsor of the DAV 5K Boston. Simply visit dav5k.boston. That's dav5k.boston.
Planning for the future is challenging. At Cushing & Dolan, we believe that sometimes the simplest step can make all the difference. A joint revocable trust allows married couples to stay in control of their assets while making sure those assets are distributed properly. Our new guide, The Simplicity of Joint Revocable Trusts, shows how couples can take advantage of both the $13.99 million federal exemption and the $2 million Massachusetts exemption without losing benefits when one spouse passes away. This trust may help you avoid probate, reduce estate taxes, and even provide a step up in basis that can save your family money when it's time to sell your home or investments. Learn how to make your estate plan work smarter, not harder. Call 866-848-5699 right now and ask for your free guide today. That's 866-848-5699. Or you can request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Your home has been the center of your life for years, maybe decades. But as you enter retirement, its role starts to change. Hi, this is Mike Armstrong from the Armstrong Advisory Group. The focus shifts from what your home means to how well it supports your lifestyle. For many people, the space that once made sense for a busy family now requires more time, energy, and money than it should. Retirement is about simplifying. Choosing a home that's easier to maintain, closer to the people and services that matter, and better aligned with how you want to live may be the right move as you head into your later years. Our new guide called Owning Real Estate in Retirement tackles a number of different issues that may help you turn your home into a source of flexibility and freedom, helping you plan for the years ahead with comfort and confidence. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's The Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. Your next incredible vacation is a click away. And if you act fast, you could be on St. Croix to experience their Crucian Christmas Festival, taking place this December through early January. Discover the magic of this long-standing tradition with incredible food, music, and entertainment, or just go soak up the sun, stroll along white sand beaches, and feel the rhythm of the heartbeat of the islands. The USVI is America's Caribbean paradise. Plan your escape now at visitusvi.com. That's visit usvi.com.
Mike, what do you got for Stack Roulette?
I keep seeing all these pieces about the California $20 fast food minimum wage law and people trying to study the effects. The California fast food minimum wage law, if you're not familiar, applies to any fast food company that maintains at least 60 restaurants. So pretty much all of them. Passed in 2023, went into effect in April of 2024. And so like as early as January this year, I started seeing pieces like, oh, this is how many jobs the new minimum wage law has killed. I do suspect it is going to kill jobs. You can't measure it yet. It's not long enough. You have to give it time to actually be measured. There's been some studies, showing that there hasn't been any spillover to other industries. I find that to be pretty useless as well, basically saying that, it hasn't driven up wages at full service restaurants. The only thing that they've been able to distinguish so far is that workers at these restaurants, there seems to be less turnover. Unsurprising. But I do suspect, overall, 5 years from April of 2024, will there be fewer fast food workers per dollar spent on fast food? Absolutely. But again, you have to measure these things in an intelligent way, because it's not, if the population of California goes up another 10% between now and when you measure it, there could still be more workers in fast food in spite of the new law.
I want to talk about this piece that Tucker dug up from the New York Times. An AI toy bear speaks of sex, knives, and pills, a consumer group warns.
Okay.
We've ordered them for the entire...
the Christmas gifts.
Yes, Christmas gifts for the entire production staff.
How much do these things cost? Could they be
$99?
Okay, so it's gonna be a little bit too expensive for you guys to afford for a trivia contest winner, huh?
But here's the thing. We got a couple things to talk about on this. Starting with the fact that one of these toys, it's a plush rocket with a removable speaker. It's called Grok.
And it's designed for kids age 3 to 12.
I'm sorry, we got to stop naming everything Grok that is artificial intelligence. There's at least 4 platforms that I know of, including this, that are using it.
So it's Elon Musk's
AI
platform.
Elon Musk has one. There's another AI platform. There's this, and there's another toy that I forget what it does.
Okay.
But here's the deal. You got, if all of you are going to name your toys Grok and all your platforms Grok, you're basically proving that there is no real creativity in artificial intelligence, because you're literally just pulling a term from a Robert Heinlein novel and using it as your own because you have no originality.
Yes.
So grow up or do better. Either one. Beyond that, if your AI plush toy, starts talking to kids about, taking pills and knives and sex and stuff like that, you probably haven't done enough work to make sure that it's actually good.
I'll go a step further and say, parents, if you are buying your 3 to 12-year-old an AI-based toy,
don't.
You are idiots.
No. Okay.
This technology came out a year ago. Nobody has any idea what it means. No, I'm going to step up here, Chuck, and say you should not be giving your minor children access to a new piece of technology that everyone seemingly understands the potential downsides of.
It's true.
It's not like this is something that we have no science fiction history about.
It's true. In 1918, you would have been like, hey, kid, here's your first car.
Yes, yeah. willing to go out on a limb on this one. Bad parenting if you're buying this thing for your kids.
That's probably
not a perfect parent over here, but I have some guardrails in place.
No, it's true. You probably don't want to buy a completely untested technology toy for your kid.
For your minor child.
At age 5. You know, it's like if...
You can have a conversation about 16-year-olds when we get there, all right?
Yeah, it's. I'm a big believer. Once you get into your teens, like, you basically should, like, let them figure out anything that they need to because, like, they're going to be, you know, going out of the house soon. But, yeah, at age 5... I could see how maybe a hard no is warranted on this. That's fair. Let's take a quick break for the rest of the day. Dow was up 230 points, S&P's up 88, NASDAQ up 548, stretching its legs. We'll stretch ours too, and we'll see you tomorrow.